institutional order flow entry drills, consequent encroachment, mitigation blocks, all those things, rejection blocks, old highs and lows, they're going to be salient to my preferred setups. I'm going to be looking for that in my specific market. So right now I'm obviously focusing in on E-mini S&P. So that idea, that midpoint of that gap, that was the focus of what I was looking for this morning. And I started the day with giving you a chart on Twitter. And you can find my official Twitter account on the YouTube channel. Go to the main page, look in the upper right-hand corner, and you'll see that is the official ICT Twitter account. If you're not finding it from that link, you're probably watching someone else that's not me. Okay, I'm not going to sell you anything. I'm not going to take you to a Telegram channel. I'm not going to invite you to a Discord. I don't use WhatsApp. So if we watch this level here and project it forward, so here's the level, and I wanted to see it open and then trade down to that level and then create a candle that runs up into this swing high. Now, admittedly, I was expecting this entire range to fulfill over the course of the morning session, consolidate during lunch, and then run up into that level here during the PM session. I would have been back in the last hour or so to show you an example of that being ran out. The market decided to do it all before lunch. So we saw the market rally up, obviously, and we want to see if it can have the ability to get through all of these levels here. This fair value gap high, consequent encroachment, rejection block, consequent encroachment, and then finally into the buy side liquidity here. So there's thresholds, okay, that levels each time the market goes higher, we're measuring whether or not it has the potential, momentum, energy, you might refer to it as trend. Does it have the likelihood to reach through those levels to get to liquidity up here? Now, if you look at the fair value gap I've outlined here from this candle's high and this candle's low, extending it out in time, you can see we dropped down into that last week. Had a nice energetic run away from that on Friday, leaving a fair value gap here, trading up into that, ramming it through, and then reaching for buy side. So with this logic in mind, I want to take a look at the intraday charts, because that smash above that 40.35 level was just brilliant today. That concept is my power 3. I internalize the daily range like this. So I'm looking for an expansion to liquidity or an imbalance above the marketplace if I'm bullish, or an expansion to the downside to a old low or an imbalance. So those are the two main decision points that you have to make. Are you bullish? Okay, if you're bullish, what's it reaching for? An imbalance or an old high or relative equal highs? That's very simple, folks. Very, very simple logic. If you're bearish, you're looking for the opposite. You're looking for the market to trade down to an old low or relative equal lows for sell side liquidity, or it's reaching down to an inefficiency like a fair value gap or something to that effect. Very, very simple. So right away you're deciding, does it want to likely go higher? And if it's going to go higher, you're looking for it to go to one of two things: inefficiency or liquidity above an old high. If it's likely to go lower, you're looking for one of two things. It's going down into a fair value gap for inefficiency to reprice to that, or it's going to run out below an old low or relative equal lows for sell side liquidity. That's it. Those two major questions, bullish or bearish, either or, then it's inefficiency or liquidity. That's the algorithm. That's what it's doing. So once you determine what it's likely reaching for, it helps you formulate the narrative, which is using this mindset here, what I was expecting to see over the course of the daily range. You formulate your engagements based on price action and the PDA rates that form in the lower time frames.